Let me do this. Okay, one more. Can you hear me, Kay?
Now I can hear you.
Okay, there you go. Perfect. Okay, sorry, Kay. Now, all right, in three, two, one, Kay, one more. How are you today?
I'm doing very well. It's I love it when you say happy tax saving Tuesday, right?
Mm-hmm. Yeah,
It's
that's.
everybody wants to hear that topic.
Are you
Hmm.
still in California or are you still in Hawaii?
Actually, I arrived last Friday and then I'm here in California. I'm actually in LA this week.
LA. Okay, that sounds good. But okay, without keeping them waiting, I'm gonna share my screen and we're gonna get started. So this is our part that every second and fourth Tuesday of the month, we're providing information to them. So we're going to talk about the different tax applications of different retirement accounts and strategize on minimizing tax liability. I just want to have to get this out of the way. This live chat. If you want to get a pre copy, please type copy on pre copy on our number 956-425-9926 and less than 30 minutes Q&A session. Any participants are encouraged to type their questions on the chat section. Then you can download the free 10-step business improvement checklist on our website at wycotax.com. And we will have a replay of the presentation on my website or YouTube channel, Chris Wycoco. Just a disclaimer that this material has been prepared for informational purposes only. It is not intended to provide and should not be relied for tax, investment, legal, or accounting advice. Examples on other materials in this webinars are only for illustrative purpose and should not be relied for technical answers. So Wycotax is a virtual outsourced accounting and wealth planning company, and we're not associated with any institution in this presentation. And it's a private business providing resources for small businesses. Okay, so the ideal listener that we're looking here, if you're a small business owner, self-employed, work from home, people that receive 1099s, S corporations, LLCs, or partnerships with or without employees, e-commerce, non-accountants, and high-income professionals more than 100,000, this presentation is for you because you are in the highest tax bracket. That's why we're targeting this individual. So IRS is hiring 87,000 new agents for audits, and that's why you want to avoid small and the trial and error approach that will cause IRS red flags. So these are the three benefits of the tax planning, Kay, and I would need more inputs from you on the following. So we discuss about we do accounting, but what do you think is the main importance of tax planning ahead for companies and high net worth individuals?
Okay, that's really a major topic for everyone.
Mhm.
But come to think of it, taxes are also something that we all responsible. Okay. So it's
Mhm.
mitigating the taxes. I believe it's minimizing it as well, making sure that all of our legal documents are put together properly. Like you, Chris, and your team does an excellent job, right? Making sure that you are the business owner and the individuals who are high net worth understand that there are options, financial vehicles there that would allow you to really put more money in a legal way that would enable you to have a tax free retirement and tax exempt.
Yeah, because can you imagine, Kay, if you're paying 22 to 32% of taxes every year, and then you divide just even like 100,000 for the 45 years of working experience, you're already putting almost a million of your money to the to something that you're benefiting less, right? So that's why part of this is aside from minimizing tax liability, it also improves the cash flow and then compliance and avoiding penalties. Because the paperwork, remember that their IRS has 3 years for an audit window. So that's
Yes.
why we develop the next thing that we look on K is identifying where's the cash or where's the income coming from. As you can see here, Kay, we're gonna talk about the three main tax sheltered products. By
Yes.
going through this income, there are your income is only being taxed in three ways. Number one, the W-2 and 1099, they are taxable now. And then the tax deferred or tax later, which you can grow your money every year without being paying tax on the growth. And then also there's an option a lot of people are not aware about, the tax free. So the tax deferred, as we all know, it falls under traditional IRA, self-directed IRA, 401k, 403, and annuities. And then tax free is Roth IRA, municipal bonds, and civil life insurance. Now, for the sake of this presentation, and we just want to be concise and direct, we only going to focus on three products. So, okay, these are the most commonly used products. We have 401k, annuities, and index universal. So my
Mm-hmm.
first question, uh, for who can a business owner, self-employed, have their own 401k plans?
Yes. They can have their own 401k plan, and they could also create a profit sharing at the end of the year for them. They could also create a defined 412E plan wherein they're creating a pension plan for their own retirement. Okay, but there is a commitment on this, right? There are IRS regulations that you need to understand. There's limitation as well, right? These are all based on your income.
Mm-hmm.
Okay. So the 401k, Chris, allows an individual or business owner to put more retirement on their own, right? Creating their own retirement tax deferred, wherein they could also use this as a business expense.
Mm-hmm.
Okay, so that's a plus for them. And also, the annuities are a contract between an annuitant and a carrier, but the source of the money is we need to identify. Is it coming from a Roth? Is it coming? Do you want to create a Roth annuity? You want to create a traditional IRA annuity?
Mm-hmm.
Or the annuity came from your previous 401k,
Mm-hmm.
403b, or 457.
Mm-hmm.
So think about it. The annuity is very neutral product. You could use it either a tax deferred or a tax free retirement plan.
Yeah. Oh
Um,
yeah. The as we go as a recap with our
mhm,
resources speaker, Kate, what she was saying, the 401k, it's you can use it when you're a sole proprietor, LLC, partnership, S corporation.
for sure.
However, there's an income limit. What is the specific income limit that for them to start having their own 401k
No, for individual, pretty much is it depends again. Okay, for individuals, the IRS says you're only allowed to put in $23,000 a year.
a year? Uh-huh.
Okay, and there is a
23,000.
catch up. There is a catch up when you're older, above than 50 years old, right?
Mm-hmm. Mm-hmm.
For a business owner, you could do at least about more than, more than the SEP IRA, which is 52,000. You could do 64,000 depending on the income of the
Mm-hmm.
business. That's the beauty of it. You are the administrator of your own 401k that's being supported by the, actuary of that particular carrier too. Okay.
Mm-hmm.
So you could go above that and define benefit for 12E. You could put 100,000 or 200,000, but it's a commitment coming from you that you continues to put in that certain amount of money in your retirement.
Mm-hmm.
Okay?
And then for the for clarity, annuities, you don't have to have any companies, right? You could have a W-2 only and a full-time job. Can we open an annuity without having your own company?
Yes, absolutely. Mm-hmm.
And the most commonly used here, Kay, on our clients, as we are serving a lot of healthcare workers, doctors, nurse practitioners, dentists, they have reserved money on 401k. Let's say they quit their job, and they have, let's say this client of ours, she has a $300,000 401k. What is the main difference? Why am I going to put my 300,000 to an annuity?
Okay. A lot of people don't realize annuity is a safe, vehicle wherein there is no, when you do a fixed strategy, right? The beauty of it is your money coming from a 401k, it will not going to be participating directly in the stock market. So your 300,000, Chris, will be safe. It will never go down no matter what happened, if the market really crash or anything. So peace of mind knowing that you have a 300,000 there. And the good thing on the annuity also, there are some products that would allow you to grow the money compounding with a fixed index,
Mm-hmm.
rate. Okay, it could be above than, more than 12%. It could be 9%. It could be
Mm-hmm.
7.5%. So depending on the interest that this carrier gives you. Okay.
Yeah, one of the questions is I what I really like about annuities, it guarantees the principal. No matter
Correct.
what happened, you have your money. The 300,000 still gonna be there because that's what the power of annuity. But one question of my client, a tech person, can I lose my money from 401k?
Yes, you can. Yes, you can because it's directly participating to the stock market. So if
Mm-hmm.
the stock market is negative 30% right now, so your 300,000 will be negative 30%,
Yes, that's why a
right?
lot nurses, doctors, they pull it out and they transfer to annuity or they buy their own rental properties. What we recommend is consult to your financial planner, have a free 30-minute session at least every quarter you meet up so they could follow and create a financial calculated risk roadmap. Now, the last product that we're going to discuss, and this is a different tax treatment because, guys, one and two, 401k and annuities are all tax deferred. You are allowed to grow the money, but at certain age, I think 72 years old, K, right? That you need to have an MRD, the minimum required distribution or withdrawal, right?
Yes.
Now, what is the the index universal life? This is also something that's very popular, but also a lot of people don't understand the power of what does life insurance index universal specifically help us on taxes.
Okay. Let me give, a lot of people would think, oh, life insurance is just life insurance. No, it's not. It's a hybrid, I should say now, that they created because life insurance is the only vehicle that is allowed for you to be federally tax free. Whatever income that you receive from this life insurance will be tax free and tax exempt. The most important thing is tax exempt because of the 7702A,
Mm-hmm.
letting you know that all the income coming from this will never gonna be reported as income. So on an index universal life, right, it allows you to grow the money compounding with an average rate between 3.5% to 8%. That's very conservative.
Yeah,
Okay.
rather than putting your money in the bank.
Absolutely. And the good thing on this one is compounding, Chris. It's
Mm-hmm.
not a simple interest. So you're able to keep the gain every year. It continues to grow the money inside your policy,
Mm-hmm.
right? And
Exactly.
the
And that
yeah.
and another thing that they don't the 3.5, the 8%, it's the third benefit of this. But going back to the main benefit of having insurance, let's say okay, we have a nurse practitioner from New Jersey. She's making $350,000 a year. But so
Mhm.
happens she has a $1 million policy. That $1 million, when she had an accident, the family got the 1 million without suffering financial losses. And that one million is also tax free.
Mhm.
That's another. But if
Yeah.
we there's no debt and there's like chronic illness, that let's say another client of ours in Las Vegas got diagnosed with stage 4 ovarian cancer. She has a 1 million policy. They can utilize up to 90% just to get back for all the treatments and medications, right, Kay? And those are also tax free.
Mhm.
Yeah, and the good thing, I mean, people don't realize the effect until they already have it. So people thought even you just start your policy 1 month, let's say you're paying 1,000 premium, and then something happened, there's an incidental diagnosis, then you already have this access. So you have the death benefit, you have a living benefit, and most of all, eventually, we're talking about the cash accumulation value where you can use on the following uh, use. These are the things that they can use it from. K, when you already know your financial position, when you say you know your income, expense, your investment, and your budget, legacy planning, we discussed this, where your beneficiary could get something without them, financial losses. That if these kids are young, at least they can use it for college.
Yeah. So
Can you hear
Chris,
me? Sorry.
yes, Chris is
Yeah.
basically what we wanted to mention it to everyone. You need to diversify your financial option.
Mm-hmm.
This conversation that we're having right now is not the conversation a typical human resource is going to tell an employee, right?
Mm-hmm.
So you're such a good resource to everybody in your community because we're an advocate of financial literacy. And understanding this diversification would really allow you to have a well balanced financial roadmap.
Exactly. That's why they need to identify that one. insurance or 401k annuities can help them on income replacement from paying the mortgage and debts, and even in if you have a business. And it's just all about talking to the right advisor how to position this kind of product that would hit two birds in one stone. It could be a business expense together with the personal benefit, and it also prevents you from estate, especially these taxes. All you have to do is, all these taxes that you're paying could be minimized if you have the right consultant for your financial journey. So again, Kay, that would be the recap for everything that we have. So there's so many topics, but we just want to give you direct to the point what are the benefits to you, because here in Wycotax, for those of you, the Wycotax has been serving 20 states for the past 14 years, and we are an ecosystem of financial planners and accountants because we want to provide you a worry-free, year-round, competitive, and on-time accounting and wealth planning service solution here in the US. Then we are here to provide you a peace of mind. We want to save you headache, save time, and save money. Then also you can have faster access to grants and loans because our company's goal is to increase your cash flow but minimize or zero out your taxes possibly. So we have this one-time offer, bookkeeping and tax bundle. We're giving $523 discount. We are going to file, especially tax season is on the air. October 15 is the deadline. You have a dedicated virtual accountant that will help you to your bookkeeping and accounting, also well planning needs. Plus, we are going to give you a 30-minute quarterly 10,000 tax savings plan. We just start at 10,000 savings. It's still not a bad idea. That's a good travel budget, or even for holidays to use that budget. Again, please stay tuned and watch us again. We have a repeat presentation on October 22, 9 in the morning for this presentation. And for those of you who missed this out, feel free to watch it on YouTube channel. Okay, so thank you, Kay. Do you have any advice on, especially we're October, for people that are already paying a lot of taxes, making to $50,000 and up, and also with companies? What's your last word for them?
I believe it's very important before the end of the year is to really look at your financial situation, right? Did you contribute enough on your 401k? Were you able to look other options wherein all of your financial are organized before the end of the year, right? So
Mm-hmm.
are you able to put some more money in your savings, or in a plan, or starting protecting your family and or the people that you love, right? Which is
Mm-hmm.
putting together a policy for yourself. Mhm.
Exactly. That's why they said people don't plan to fail. We just fail to plan. So what are you guys stay watching? What are you waiting for? Please book a 30-minute consultation on our number on our website. And again, Kay and I, we work all together just to give you the maximum tax advantage. All right. Again, guys, we are here to increase your cash